Time for the market report, another WASDE and one with an apparent impact.
At least that's what our expert is telling us. We'll get into the details of that and some tariffs. But first, this month's WASDE report. We dive into the details of what it had to say. And then in our row report, Dr. Will Maples gives us the implications of the report and an update on how the tariff talks look from an ag perspective. So, this month's WASDE was not really a big surprise. Normally this time of year, these reports can make waves, but this one was different. Row crops faring the best, but some movement in livestock as well. Bella Bingham gives us the details.
U.S. wheat supplies looking up. High current stocks offset lower production this year, which is down 3%. Food use also up, while season average farm price down by 0.20 cents at $5.30 per bushel. Global wheat supplies and production raised nearly 5 million tons and about 809 million tons respectively. Largest outputs from Europe, China, India, Argentina, and Canada. Consumption increased slightly, mostly in food, seed, and industrial use. U.S. corn crop looking to be one of the largest on record, projecting supplies higher as well. Corn use also up by 1%, mostly on food, seed, and industrial use. Season average farm price $4.20 per bushel. Global corn also showing a record production. It's a big year for corn, it seems, while consumption also up exponentially to the extent that it exceeds production. As a result, world-ending stocks projected to fall. U.S. rice production slightly lower than last year, mostly due to less long-grain production. All rice yield also down, however with record imports and heavy stocks, supplies are still high. Season average farm price $13.20 per hundredweight. Global rice production at a record, with the largest increases coming from Asia. Consumption also high, as is trade. U.S. soybean crop lower due to less acreage and supplies down slightly. However, crush is expected to increase along with meal exports. Ending stocks projected down 55 million tons. Season average farm price $10.25 per bushel. Global soybean production up slightly as well, with Brazil, Paraguay, Russia, and China showing the largest increases. Crush up 3% and exports projected to increase 4%. U.S. red meat and poultry production projected lower, beef mostly due to lower dressed weight and an import ban from Mexico due to New World screwworm. Poultry and egg production slowly recovering from bird flu, and future projections look encouraging. Milk production looks more encouraging, projected to increase due to expanding herd and higher milk per cow. Dairy products projected to lower in price. All milk price forecast to be $21.15 per hundredweight. U.S. cotton acreage expected to increase, while yield expected to be lower than last year. Exports looking up, however, due to an increase in global demand. Season average farm price 62 cents per pound. Global cotton consumption up slightly, trade also up by over 5%, while ending stocks slightly lower.
So now you have the context. What are the experts saying the biggest takeaways are? I spoke with MSU Extension economist Dr. Will Maples to get his take, and he says the report is not surprising. He also gives us an update on tariffs and how they could affect ag.
We got the newest WASDE report here in May. This is, one of the biggest ones of the year because this is the first look we get at USDA's official estimates for the upcoming crop year. So for this 2025 crop that's currently getting planted, what are our supply and demand estimates going forward? And kind of the biggest takeaway is there really were no surprises in this report. Sometimes this one can come with surprises, move the market. This one was pretty much in line with what expectations were. Positive from it, we're looking at a lot more bullish soybean market. So we've talked before about, we're decreasing soybean acres this year, just given where prices are compared to corn. And in the report, we're looking at 295 million bushels of ending stocks on soybeans, which is a really good ending stocks number for soybeans. We're down below that 300 million level, and that's based on trendline yields, which we might not beat. So kind of as the first report on soybeans, it's a little bit more bullish market, a little bit more price supportive, which we needed right now in these economic times. On the corn side, it was bearish as expected. We're planting a lot of corn this year, and kind of where ending stocks are. We're still below that 3 billion bushels on ending stocks of corn with these numbers. 2 billion bushels of ending stock of corn, this number, which is good. That's helpful. Once we get over that 2 billion, that's when we start worrying, but there's still going to be a lot of corn on the market. It's kind of, unfortunately, planting is slow in some of the southern corn belt states, which when it comes to yield, planting is slowed given all the wet weather we've seen. That's going to be a hard yield number to attain. So as we go through the growing season, seeing what kind of yield we actually end up at the national level, we could see those stocks come down, more price supportive market on the corn side.
And speaking of trade, that you had mentioned to me before we started that there was some big trade news that you've been getting a lot of, you've been having to give out a lot of advice on.
Yeah, so if anybody's watched the news over the last, month, 2 months, trade has been at the forefront. From an ag perspective, U.S. ag needs international markets for farmers to make a living. We export 50% of our soybeans every year, 20% of our corn, over 90% of our cotton. So trade agreements, tariffs, that all has a great impact on ag. From our initial announcements, we've seen a lot more negotiations going on. We've seen from, the original tariffs that were announced by President Trump, they've come back. They've got this 90-day agreement with China right now. So we're seeing some more positive signs around trade. And it seems like China's willing to come to the table and negotiate, which hopefully ag is going to be in there as part of that negotiation. They'll have to buy ag products. And if they can pull that off, that would be definitely a boon for our commodities.
And that's it for a deeper look into the markets.